right, folks. Well, welcome to the third webinar in the series, Funded Trader for Funded Traders. The one thing with this one is it is applicable to both prop traders and to regular day traders. We're going to talk about risk management and money management strategies. This is probably the single most important aspect of the prop trading side that you can have. Trade entries are trade entries, and you're going to see them. You're not going to see them. They're either there or they're not. But how you manage that trade, how you manage your risk, and how you manage your money is extremely important. Virtually all of the rules, the evaluation rules in prop trading, are centered around that. But it's important just to have that skill set for more traditional trading models, trading your own money, etc. And one of the things that separates Pat's methodology from traditional market profile methodology is the risk and money management. The trade entry, the reversal, the high volume area reversal, that is a standard par for the course market profile. Granted, Pat's HVAs are slightly different than other people, and that they're considerably more accurate in the long run. But the real differentiating factor comes down to the risk and the money management rules. And one of the beautiful things about that system is it can be tailored to match evaluation criteria for prop traders, which lends you to not just be successful with passing an evaluation, but staying funded, which is a big thing, because you got to stay funded in order to get paid. So just a quick recap on the last few meetings that we've had. We've met on a few different topics, and we've covered how and why. And before we get to that, I want to give you a brief background. If I keep saying Pat, if you're new and you don't know who Pat is the Angry Trader. He is the famous Angry Trader. He's a 20-year professional trader. He developed a modified market profile method. We say it's highly sought after for trading and education. Guys, we have funds come to us all the time. We have various investors from Goldman Sachs, from big firms come and want to learn his methodology. Over the last 15 years, Pat has taught thousands of traders this method. There's countless success stories. I welcome you. Go to our Trustpilot. There's over 100 5-star reviews. You'll notice there's nothing but 5-star reviews there. There's a reason why it works. If you follow the system, if you follow the methodology, it works. It's a system that you have to be disciplined for. It's more reliant on discipline than it is on speed, than it is on intelligence, than it is on knowledge or math skills. It's just about being disciplined to the system. And as I said earlier, Pat's a 20-year professional trader. He is licensed. He's a Series 3, 24. What else are you? You're a bunch of different licenses.
34, CTA licensed, former 7, former 66, and one of 8 guys at the entirety of Wachovia Securities that were authorized to sell collateralized debt obligations. So I know risk.
So just so you know, as a background, when we talk about professionals, and I say this often, if you've heard me get into this before on some of the other webinars, there's a lot of pop-ups, right? There's a lot of people that learned to trade in the last 3, 4, 5 years. They learned it over COVID from an online course that they took. There's nothing wrong with that. I have no problem with somebody learning how to trade and being successful at it. But don't hold yourself out as a finance guru, as somebody that's incredibly good at this and has a background in it, unless you really do.
And which I don't, Mike. I despise all their kind.
I understand. So and then and as you guys, if you followed our company, you know we have a string of true professional guru level traders. We've got Todd Bubba Horowitz. He is a 47-year veteran, former floor trader at the CBOT. We had Dan O'Brien with us, one of the early algorithmic traders, 25 plus years in business. I mean, guys, we're talking about the best of the best professional grade guys. And the thing is you get their knowledge. You don't have to make the mistakes that they made early on to get to the level of knowledge they have. You get to get it firsthand from the main people who came up with these things, and you get to apply it yourself. So that's a quick background on Pat. I am 25 years in the financial industry. Mikey Z, former investment banker with one of the largest institutions in the world, founder, owner, and operator of multiple trading and trading education companies. I say I'm not only the president, I'm also a client. I didn't do a lot of trading when I worked with Wall Street firms. I was on the investment banking side. So I am a true student of this game, very similar to a lot of you guys. I've been doing it for a little bit longer than some of you, but I can tell you this. When we started looking at companies and how we wanted to build this out and how we wanted to develop this company into having true gurus, that was one of the biggest factors. Is we wanted systems that worked. We wanted to make sure that we weren't some of the shadowy organizations that are out there selling a lot of BS, pushing a lot of systems that, they can put up flashy numbers themselves, but it can't be replicated. It was all about the students, guys. And I held myself out as a student of the game and said, show me how to do this stuff. And I can tell you, you look at our success stories, you look at the students that we have. Many of you are on this call with us right now, and you'll see this is a program that works. This is a system that works. We don't put up a lot of numbers of what Pat can do. We intentionally don't do that. We don't see us putting up Bubba's numbers and his performance or Dan's and his performance. What we talk a lot about is how successful the students are, because it doesn't do you a whole lot of good if Pat can trade with a 91% win rate and a 3-to-1 profit factor. That's great, but he's not trading your money. Okay. The question is what can he teach you to do for yourself and with your own money? And that's really what we focus on. Quick disclaimer. This is information is being passed today for education purposes. We are not financial advisors. We do recommend having a financial advisor. Trading investing carries a high level of risk. It's not suitable for all people. I'm going to sum this up, guys. Don't trade with money you can't afford to lose. This shouldn't be your last $10,000, $5,000, $50,000. Okay. If you're learning to trade, especially, there's a cost of loss to learning how to do it the right way. Of course, we do everything in our power to help you minimize that. And that's one of the reasons why we're such big proponents of prop trading. So if you've missed the last few webinars that we've done, we've really focused on why and how every trader should be a funded trader. This is a concept that we've come to believe in very strongly. The why is very simple. You get a tremendous amount of leverage. You're able to, for minimal evaluation investment, you're able to trade $150,000 accounts, $50,000 accounts, $250,000 accounts. The beautiful thing is it doesn't matter your net worth or investment size. I believe these rules still apply. At the end of the day, if you are trading a prop firm's money and you lose, you have to go back and pass the eval or pay your what they call a re-up fee to get back in the game. Versus you're trading your own money and you take those losses for real. It's a massive difference in your own personal finance. So we've become big proponents of trading other people's money in the form of prop trading. In our mind, we call it dumb math. Okay, and if saying dumb offends you, I'm sorry, but we do believe it's dumb. Okay, it's dumb math. At the end of the day, it's less risk for your own personal assets. You're putting way less money at risk because you're paying for an evaluation, which could be $350 to $500, and you're paying re-up fees if you fail out, and those can range from $75 to $350. Okay, with a huge upside, right? You're trading $150,000 account, $100,000 account. Most organizations, you're keeping between 80 and 90% of your profits. So you have this massive upside with very, very little risk. It's a very simple process. So when you hear us talk about the process, if you're not familiar, you have to apply, you have to take an evaluation. If you pass your evaluation, you're funded. Then you have to stay funded by following certain parameters and certain rules. If you're able to do that, you're able to get paid. One of the biggest things we talk about when we talk about how every trader should be a funded trader is we talk about the idea of these parameters. Okay. Every firm is a little bit different. There's different rules. If you don't know what I'm talking about right now, reach out to us. We'll get you a copy of the last webinar where we went into deep detail about daily loss limit, max trailing loss, consistency tests, max positions, profit goals, minimum weekly, all of the different parameters and what they mean and how they can affect you. And we went deep into that. If you missed that, I strongly recommend going back and watching it. It's worth the time. Understand your particular program, understanding who the providers are, the prop firms. Every prop firm is a little bit different, so you really want to get a deep understanding. We're kind of this is kind of a newer part of the game. Not a lot of people know that much about prop trading. Our team, meaning our education consultants, Pat himself, our instructors, they've been using prop accounts for years. So they're very familiar with the different organizations. They're very familiar with the rules. They're very familiar with the parameters of the different organizations and how to build your system for it. I don't want to say that we're prop trader experts because I don't think that's been around long enough to really have an expert yet, but we're about as close as you can be to prop trading experts. And probably the single most important part of this is we're agnostic to the different prop firms. We do business with Apex, we do business with Legends, we do business with Top Step, we do business with Tradeify, and we know the ins and outs of the different organizations and the benefits and flaws in each one of them as well. So we can help people set them up, get themselves set up for success at the end of the day. So understanding one of the biggest hows is you're not excused from regular trends in the market. You're not excused from live market trading. Being aware of news cycles. This was a big killer earlier this week. News cycles just threw the markets into a tizzy as usual. And understanding your regular risk management. And that's one of the things we're going to talk about right now is this concept of risk and money management. So there are certain strategies that work very, very well at prop firms. And one of the biggest things is that you have to have a consistent strategy. It's something that you can execute day in and day out, week in and week out with the same rules, same parameters. It has to be systematic. Okay. So you're going to hear things like consistency, systematic, discipline, right? It's a rules-based system. Rules-based systems allow you to get funded and stay funded over a longer period of time. There are certain systems that are better than others. Some have higher win rates, some have higher profit factors. One of the most important things, though, regardless of where you decide to get your prop trading education from, one of the most important things you have to do is find yourself a system, okay? It has to be a high probability system, okay? It has to be high probability trades. It has to be a high probability methodology. And what do I mean by high probability? So there's a lot of different forms of trading. Okay, there's home run trading. The idea that I can take 4 trades, I can lose 3, but if I have a 6-to-1 profit factor, I will absolutely still make money. Okay, I'll absolutely still make money.
Mike, if I can,
Yep, go ahead.
last night we send out overnight opportunities for people the next morning to show you what you may have missed in the overnight. Now, I'm not suggesting everyone try to stay awake 24 hours a day to trade, but specifically in the, let's say, micro gold, there were 7 winners and 1 loss. Now, to address what Mike is saying, in the micro NASDAQ, there were 3 losses and 1 winner. That 1 winner was 3 times the profit of all those losses combined. So that's what he means by the home run method. Okay.
Exactly. And by the way, I just saw, I'm sorry, David, I missed your question. So we have Bubba Trading, we have Flytech Trading, we have Nova Trading Lab, we have a new company coming out, which will be out this summer, which you guys will get some news about if you follow our emails, called Cognitio. And then, of course, we have Target Trading. So there's multiple companies that will be that we own and operate. Pat and I are partners in all of them. Pat and I are partners in all the companies. We own the majority share, if not all of those companies, with the exception of FlyTech. So we when I say that we're in this business, we're in the trading business. So back to the point on the probabilities and overnight. So you have to have a high probability system. I always come back to Pat's reversals and inverses because they're just so simple and so rules based. It's high volume areas, first reversal at the high volume area. It's super straightforward. The mindset of the trade is very simple. You see it, you follow the rules, you go home. Okay. I also love gap fills. Gap fills are a super high probability trade, and there's a ton of them in this marketplace. Pat, you and I were just talking about this. Statistically, we used to see around 95% of the trades on a daily basis would be reversals and inverses, and 5% would be gap fills. And we're just seeing that gap fill percentage. It's up over 20% right now, guys. And they're big winners. They're big rips. So we're seeing a ton of gap fills lately. It just has to do with the overnight volatility in the markets and the general volatility in the markets. So another real high probability trade. Talk about consistency and probability. Guys, I'm not going to go into this. Any of you that have seen us pull this up before, this is our student wins and losses for the last 4 years. We actually have it for 2021, but there wasn't enough room to post it on this one. But I mean, guys, we're over 70. Our students are over 71% every year win rates. Profit factors north of 1.5. They're making money. Okay. The mindset is that they're making money. So when we talk about the types of trading and trading strategies that work best for prop trading, and by the way, as I said earlier, regular trading as well, trading your own money as well. Two of the biggest factors that don't always get incorporated. Everybody wants that entry. They want to know their entry. They want to know their entry. Where do I take the trade? What's the trade that I take? Okay. That's great, but that's a part of the equation. Two extremely important parts of the equation that aren't talked about enough are risk management and money management strategies. And again, this is where Pat differentiates himself from the rest of the equation, the other people that are out there in this atmosphere. So Pat, talk to me a little bit about the definition. How do you define risk management? What would you say risk management is versus money management?
Risk management is part A. What are you comfortable in risking? It's irrelevant what your account size is. And the reason I'm going to say this is because this is a very little known fact, and this is a psychology fact. When people start risking and seeing more than they make in a week in one trade in seconds, they literally start losing their minds. So not everyone, if you get 10 people trading $50,000 accounts, trust me when I tell you, each and every one of them is going to have a different risk tolerance. Some of them are going to have no problem risking 50 grand a trade. Others, if they're risking 300, they lose their freaking minds. So it's irrelevant what your account size is. We have to find what the risk size is for you that you can tolerate. I have quite possibly one of my most successful students. His name is Roman. He has been with me for over 10 years. He's been trading live for at least 5 years. And understand something, this is not his full-time job. He trades in the morning. He's a music teacher for gifted children, for prodigies. So he's a perfectionist. Roman consistently puts up numbers in micros profit that most people need the minis to accomplish. I don't bring up the suggestion of why don't you move to minis because he's not comfortable with it. So why would I try to talk somebody into doing something they're not comfortable with? I'm not a car salesman. I'm not trying to sell you a better car. I'm trying to figure out what's best for you so you can consistently be comfortable with the risk you're taking and the profit potential that you can make off of said risk. Money management Part B. First, you've got to make it, which most people think is the most difficult part of this business, but it's not. The most difficult part of this business is keeping it. That's where the nightmare comes in. Well, why? First and foremost, most people have been conned by the charlatans in this business for years with methods that didn't work, ridiculous technical analysis, using RSI indicators and MACDs and things that are all trailing indicators that have never ever proven one time to predict where a market is going, because it only shows you what's happened after the fact. All right. So what happens? People are taught these ridiculous methods that have never ever worked, and you just keep pouring money into it, and you get nothing out of it. Michael showed my winning percentage. I am the only person in the business that draws those signal levels the day before the market opens, and you can use them when I draw them at 5 o'clock p.m. for the overnight, the pre-market, and the entire next day's pit session. They are good for those sessions. I am the only person that does this. All you have to do is wait. I then teach you, A, how much are we going to risk? How many contracts is that? Now that you've made it, how much can you spend? How much can you risk? Do you want to risk anything? So, for example, I'm going to go into very briefly, let's say you're using your own money, not a prop firm's money. Now, there are much more advantages now these days than there ever were before. A company that I used to work for had a prop firm. The rules were so draconian that I literally had to ask them, because they were using my method to qualify people. Are we trying to make money for you or the client? Because you can't have this both ways. These rules are so ridiculous, there's no way anybody's ever going to succeed. With that being said, thank goodness that company's out of business. They don't exist any longer. But there are actual real companies that we work with that give you a phenomenal chance at making money. So let's say if you're using your own money, first and foremost, let's use a $50,000 account, $5,000, we use a $25,000 account. It's irrelevant. It doesn't matter. Let's use 50. First and foremost, guys, understand something. There's a cost to learning this method. You've got to prove to me that you can do it in a system that is laid out from 2 contracts to 3 contracts to 4 to 5 to 6. You've got to earn your way to 6 contracts on sim, period. Because if you cannot do it on a simulator, there's no way you're going to do it with real money. Why is that? Because when it's real money, the pucker factor is absolutely real. That's why we start people off on micros. It's 1/10 the risk. You're dipping your toe into it. You start off with 2, you build your way to 6. Well, guys, let me tell you something. If you can do it with micros, you can do it with minis. Now we've got to find the correct risk for you. Okay? So think about things this way. $50,000 of your own money in an account. That's 50 grand of dead money that you cannot use anywhere else. So first and foremost, that is locked up. It is not going anywhere. You cannot use it. A 5% daily risk, which is insanity, that I've heard people talk about. They're willing to risk 5%. That's $2,500. You're not going to last very long if you don't have a method that works. If you go down to 2.5%, it's $1,250. That gives you a little bit better of a risk. Some people will say don't risk more than 1. You're going to risk $500 for an entire day. You may be able to do that with micros, but it does not benefit you to use $50,000. You can use a whole hell of a lot less money, which most people, especially brokers, are not going to tell you. Let's move to $100. 5% of that is $5,000. 2.5% of that is $2,500. That's a decent amount of risk. The problem is you're locking up $100,000 that you could do something else with. Okay. So with that being said, What are the real risks? It's not just losing money, guys, but it's locking up a pile of money that you could be using somewhere else or not locked up at a brokerage. So, for example, if you're going to risk that kind of money, guys, you may only get 1.5 to 2 trades using a method on the minis. Why is this? Let's say we use my method, and you're going to take a max risk trade in gold of 1 contract. I'm going to give you, before this volatility, a $300 maximum risk per contract. If you were trading 2, that's $600 of risk. You're already more than halfway toward your daily loss limit if it's your own money at 2.5%. That's not going to give you a lot of opportunity. Again, risk management. Why are we trading minis when we can go to micros, which is an entirely different story altogether? And by the way, for those of you who think trading micros is a step down, you're out of your mind. You're absolutely insane and you're irrational. And I can prove it to you because I'll bring you into my room. I'll bring any of you into my room if you would like to come in for one day, and I will prove it to you. Any of you who are not students, I have nothing to hide. I'm happy to show it to you every single day. What is the problem that you're always going to have in the back of your mind? That's my money. That's my money. One way that we have helped alleviate that stress is in my method. All of my students, whether they are just beginning, whether they are on sim, whether they are live, whether they're prop account, they all have to submit every single trade they take. Why is this? Well, because first and foremost, it's my method and I know exactly where the trades are to be taken. So I know what they're doing. Number 2, they have to send the screenshot in, which forces them to stop trading until I address it, which I address it fairly quickly. If you send a screenshot in, I'm addressing it within moments. But what is the real reason for this? I'm doing everything humanly possible to allow the dopamine rush to subside, whether you have won or whether you have lost money. Okay? What do I then do? Let's say we have a student named Roman, and Roman sends in a trade, and he's trading micros, and he's up $150 on his first trade. I will give you options. You can do one of 2 things. You can risk half of that amount, which is $75. You can risk all of it, which is $150. If you lose or you break even, you must stop for the day. Why is that? Because let's say if you risk $75 and you take a full stop out loss in your next trade, which, guys, is very possible. As you saw, I can lose 25 to 30% of trades every year. There is no guarantee what sequence those full stop losses are going to come in. So if you risk and lose $75, the human mind is a nasty thing. You're not going to remember the $150 winner you had. You're going to remember the $75 loss you just had, which puts you directly into revenge trading mode. And if you have ever learned anything about revenge trading or revenge in general, when you seek revenge, dig 2 graves. Theirs and yours. So there's a reason that I have students submit all of their trades, because I can stop them before the bleeding becomes terminal. Also, let's say you choose to risk the money. And same situation, you risk $150, you take a $75 risk. Let's say that trade was a $100 winner. Well, you've won that. You're now up $250. The money you can risk has gone up. You can now risk $125. As long as you keep winning, you can keep going. But during any time of that sequence where you lose or you break even, you must stop. That is if you were trading your own money. Because things can go sideways very, very quickly when you're trading your own money and you're not talking to me. What I will tell you also is, guys, the dirty little secret in this business, a lot of these broker companies or a lot of these prop companies, they want you not to have a method. They do not want you having a coach. They do not want you having somebody throttle you back. They don't want somebody giving you your options so you can make choices. They want you to blow up that account as many times as possible to pay the re-up fee. That's what they want. These people are not in business because they're just magnanimous, wonderful people. They know the business. They know the percentage of people that have no patience, no discipline, and absolutely nobody coaching them. They know this. For example, everyone, professional athletes. I was a professional athlete. I was a professional fighter for 14 years. Professional football players, their coaches are coaching them every week before a game. Their coaches are then working full time during that game coaching people. When I was 16 years old, I was in the Florida State Freestyle Wrestling Championship. I was wrestling a guy named Mike Woodard. This guy was a senior in high school, built like a bodybuilder. I so happened to be very good at squatting. At 160 pounds, I could squat 315 pounds for 8 reps. I just so happened to be fortunate that his go-to takedown was a double leg takedown, and I stuffed him every single time he shot it. I slammed him on his back several times. At the end of the match, I'm winning. My coach looks at me and says, "Do you want to win?" I shake my head up and down. Don't move, because I was right about to do something stupid. Don't move. He helped me because I couldn't see everything that was going on around me. He saw things I could not see. That's what a coach does for you. That's what someone like me does for you in a room when you're in the mix and you've made a huge winner and you really don't know what to do or what to risk next. Okay?
Or a huge loser.
Or take a huge loser, okay? Now, let me tell you something that happened afterward. I was then told that I just defeated the 2-time state freestyle wrestling champion. I lost my next 2 matches. So there's some coaches that should say things and some coaches that should not say things, okay? I was so freaked out, I lost my next 2 matches. So you need a coach. The dirty little secret in this business, guys, is they don't want anyone looking over your shoulder, keeping you responsible and accountable for everything that you're doing. I have literally dozens of students who are prop account traders, from the $25,000 where they're using micros to the $250,000 accounts where they're throwing 10, 15 contracts at a time. As a matter of fact, Legends changed their rules because some of these kids started making so much money that it was much more profitable to keep the 10% of what they were making and pay them out the 90, because they were not making any money on them on the re-up fee now. And they were making multiples of what the re-up fees would have been had they had blown out several times. Now, let's say you're going to go to a prop trader funded account. First and foremost, the numbers that you see on the screen in front of you, guys, that's not your dead money locked up in a brokerage account. That's their money. They're taking the risk. I have students that I have coached for years who are liquid 7- and 8-figure net worth traders. Now, they built their money in other businesses and they can very easily afford to throw a huge amount of money in an account. But you want to know what they learned from business? Why use my own money when I know what I'm doing, when I can use someone else's and keep 90% of the profit for no risk? I want you to think about that. Think about that. Now,
Well, Pat, I think
yes.
one of the biggest messages is that right in front of you there. I mean, I'm looking at the $100,000 account. Your cost is $225 a month. So that's your max risk, not $100,000. Your max risk is $225 a month.
225.
Yeah. Yep. I mean, and we talked about it earlier, dumb math. To me, I just can't get over the dumb math part. But, and this is where I think you said something before, and I just want to bring that back up. Not that many years ago, prop firms were designed for you to fail. There were basic idea was they made it just impossible to hit the eval standards. For example, and we keep using Legends as an example just because of pure familiarity with them. They built their method, their eval method, against your trading method. So with Legends, like they're literally like it's passable, it's sustainable. We've got multiple students that got and stayed funded for months and months and months. It's a non-issue. You know what I mean? And God forbid you make a mistake. God forbid you lose your discipline and you fail out. You guess what? You pay your eval fee, your $75 or 325, or now they have a program at Legends where once you're funded, you never have to eval again. You just pay a re-up. And a lot of firms have gone to that now. You're talking $75, $150 to get back in the game, not have to suffer those catastrophic losses and win them back in your own personal account. So anyway, go ahead, Pat. I'm sorry.
This is a comment by one of my current students, Pete Russell, who had been with me before. One of the things that I like about sending every trade to Patrick, for me, it eliminates spontaneous gut feeling trades. Because I know Patrick will rip me a new one on the mic. You've got to know the rules, abide by the rules, and be prepared to defend your rationale. That's exactly it, guys. There is no room for failure here. If this is how you have to look at this. Is this a hobby or is this a profession? Because if you're going to treat this as a hobby is something that you pay money into to derive pleasure from. A profession pays you. End of the story. That's it. So now let's get back to where we were using, let's say, a $50,000 account. The most you were going to risk on a $50,000 account, let's say, was going to be $2,500, which is, to me, absolutely insane. 5% of your account. Let's do something more reasonable, $1,250. Well, with Legends, you've essentially doubled that up to a $2,000 trailing loss, end of day trailing loss. What does that mean? That means if you've lost more than $2,000 at the end of a day, they're going to suspend your account. You're going to have to re-up for your $75 and go again. Before, you had maybe what? 1.5, 2 chances in a day, possibly, depending on how much you lost on your first trade. God forbid you lose 2 in a row. You might even have gone over your maximum loss. Well, the way it's designed in Legends is at a $2,000 end of day loss, I'm going to give you 3 trades at a $600 maximum risk each, which is going to be $1,800. So if you lose all 3, you did not bust out. You do not have to pay to re-up. So for example, at that level, you could trade 2 gold contracts, 2 oil contracts, 2 S&P, or 1 NASDAQ. Now, what I will tell you about a NASDAQ contract, you may as well go for the micros, because it is not worth, in my opinion, trading 1 contract. I make my students and my clients do it to teach them pain. Because if you can trade a 1 contract, 1 lot trade and get break even or make money on it, you can do anything with multiple lots. So I teach it just to inflict pain on them and appreciate their options of going with more micros. Let's say you were going to move to a $100,000 account and your 2.5% risk would give you a $2,500 max day risk. Well, for the $100,000 account, your end of day risk, max risk, is $3,000. You can take 3 full max trades at $900 a risk. That's 3 gold contracts, 3 oil contracts, 3 ES contracts. Now you can trade actually 2 NASDAQ contracts, but I would still tell you to trade the micros, because a 2 contract trade on the NASDAQ, if you get slipped, will pretty much wipe you out. Trust me, and will not let you have enough risk to take another trade. $150,000 account. This is where things start getting funky and spicy. That's a $4,000 risk. Each trade, I'm going to give you 3 swings at bat at $1,250 max risk each trade. That's 4 gold, 4 oil, 5 ES, 3 NASDAQs. Now you can really do damage and let things run. Then you're going to say to yourself, well, why so few contracts? Guys, if you look at the Legends package for $150,000, it says max contract 17. You're not going to get filled on 17 contracts in the NASDAQ. It's not going to happen. And if it does, you're going to get filled over a 7, 8, 10 point spread range. If, God forbid, you're taking a breakout trade or a gap fill and that thing slams, you're definitely not going to get filled for all of those contracts. So you may as well not try to attempt to make a risk to reward calculation based on that many contracts. Not to mention, guys, if you were trading the market today, we were in a short ES trade when the Great Britain trade announcement came through. Just about every one of our students hit their initial one-to-one reward to risk. Our automated software went directly to break even, stopped them out immediately. There was what, a 10, 12 point bar. If they would have been slipped, they would have blown out their entire risk management. So what's the difference here? Guys, if you lose your max risk of, let's say, $1,250 on a $50,000 account, that's 2.5%. $1,250 hurts, man. You're also coming back a loser the next day with the revenge trading mentality stuck in your head. We are tailoring this to give you 3 swings at a home run with max risk and still not bust you through your end of day trading max, so your account gets shut down and you have to re-up and pay again. Not to mention the fact, this is the same story, guys. You got to send me in everything because I'm going to slow you down. I'm going to calm you down. One of my students today, Steve G, trades the micros, took 2 micro gold trades. The first one, he made $39. The second one, his total for the day was $333 live real money, the most money he's ever made on one trade in the micros. So if you want to convert that to minis, that would have been a $3,300 trade. He's working his way up to the minis. He's comfortable at the micros right now. Why should you do something you're not prepared to do? Why should you jump in the deep end when there's absolutely no reason risking your own money when you can now risk the prop firm's money? Why? There's no reason. So now when people tell me they just don't have the money to do this, I've just taken 99% of the expense out of the equation for you. And please don't tell me you cannot do it or it cannot be done, because I have dozens of students doing it every day. We had 21 winners and 7 losses today. What does that mean? That means 21 separate, distinct, different trades that were winners. Not 7 people taking the same trade, counting it as 7 wins. As a matter of fact, 4 people took the exact same micro gold gap fill this morning. It counted as 1 win. That's it. So guys, all you've got to do is take the step and do it. 99% of the risk has been erased for you. The question is, are you willing to put in the time, exercise the patience and the discipline to do this?
So, guys, I know if a lot of that might have been, especially if you're new to trading, a lot of that math might be over your head. It might sound foreign. That's okay. We have a lot of people that just started, don't know anything. They're literally zero experience and they want to get to that level. We thrive on zero experience people. One of the reasons why, and Pat will say this over and over again, they have no bad habits.
Yep.
He can teach them his methodology right out of the gates and move forward with getting them funded. And guys, I'm going to tell you, we can get people through. If you're attentive, you come through class, you attend and do the things, submit your trades like you're supposed to. You're learning in a sim account until you go live. You can get to that funded program very quickly. I'm talking 60 days max. You can do it. Now, there's other people that take their time. They want to learn it a little bit slower. They want to take their time through going through the classes, really getting to know it, build up their confidence. That people can take 6 months. It's really up to you. You kind of set your own pace with it. One thing I will say, Pat, and we don't talk enough about this, we always talk about tailoring people back and pulling in the reins on trading. The other thing that submitting the trades does is it gives people that aren't sure confidence. Because when they send in a trade that they're not sure about and they hear that they did it right, and then they get that immediate feedback, I did it right, I did it right, I did it right, it does build up that confidence. Because one of the things you mentioned it earlier, there's a pucker factor when you go live, that stepping in front of the bus, willing to put things at risk and willing to really give it a shot. And when you've built up the confidence of having it submitted a trade, it's a win, submitted a trade, it's a win, submitted the trade, it's the right trade, maybe it's a loss, but you did everything right. Okay, building up that level of confidence both in yourself and in the system that you're trading is absolutely imperative to being a successful trader. And we don't talk about that side of it enough, of being able to submit your trades and build up the confidence in the methodology, believing in the method, right? And believing in yourself. So there's another factor, there's another side that we don't talk about very often.
Also, Mike, when you send in a trade and you see 7 other people did the same exact trade at the same time, and you see my email populating in front of you on the screen, and you're opening, same trade, same trade, same trade, same trade. What everybody in the room and in the webinar has to understand right now, I am not front running people in this trade. I am not telling people what to take, because some people don't like certain trades that I teach. Some people love them. Some people hate certain trades, but they've taken down so much data, they know it's a huge winner, so they take them anyway. The choices
Right.
that you make are your own, everyone. Okay? You're learning to do this. So if I get hit by a bus and I'm out for 2 days, you can do this.
I don't think you'd be out from 2 days. I don't think you'd be out for 2 days from a bus.
I wouldn't.
I don't
I've
think
been
the
hit
bus
by a
stands.
bus before, and I was back the next day. So.
No, but in all seriousness, though, I think that's a big differentiating factor. We do have a signal room where, as you're learning to trade, if you want to join it and you want to get the trade called out for you, just to get used to stepping in front and taking the trade, we do have a room. Yeah, it's called Market Mavericks. It takes blow off trades. It's a cool trade. Very easy to learn, very simple, and it really just gets gets your appetite for trading up, because you're taking trades and seeing winners, but they're still get called out by a professional. One thing with Pat's methodology is learning to do it for yourself, learning to do it on your own in isolation. And it's funny because we built a business teaching people how to trade, but one of the problems is if you teach people how to do it really well, which we do, a lot of times they're like, I really don't need this anymore.
Yeah, they leave
right?
me. They leave me
But
like
they come
every
back.
woman in my life has ever done.
But they do come back because they always like to sharpen their skills and they like the coach. So,
Like every
so
woman
guys,
has always done. Yes.
So we've had you guys on for a minute here. So what I want to do is I just want to wrap it up real quick, tell you a little bit very quickly about the couple of different programs that we have for prop traders. Our baseline program is called the Prop Trader Accelerator. It carries with it the entirety of our system. It's got the HVAs, the auto download. It's got the executioner for the reversals. It's got the live trading rooms, small group mentorships, campus library. It has the ramp up classroom, trade reviews. The step up from that program is called the Prop Trade Accelerator Plus. It adds one thing, okay, but it's a really important one thing. And what it does is it adds trending trades and gap fills. It adds a high probability trending trade, and it adds gap fills. So it's literally the identical to the prop trader, but it adds what we call the Da Vinci software, which is a trade assist software. Populate the trade and manage the trade using the software for gap fills and for trending entries. Doesn't sound like a big uptick, but like I just said earlier, it's adding 20 to 30% more trades to your day. and they're very high probability trades. Go ahead, Pat.
So also, Mike, guys, I want you to understand something, because technology has advanced so much in trading as well as everything else. You are not manually measuring out risk on a bar using a crosshair anymore. The executioner, when the trade is valid, it will show you, let's say on a reversal, if you're going short, a red bar showing you that the trade is valid, that you have enough reward to risk below you to take the trade. If the trade is valid and it pulls you in, it will manage the entire trade, start to finish. If it gets disqualified, the executioner will disqualify it and then look for another one. So guys, you are now going from being a human calculator, trying to set orders, trying to do all these things while the market is moving, to just managing the software. Same thing with the Da Vinci software.
Right. But one of the things that's important, and we don't stress this, we talk about the power of the software. It is powerful, but we also believe in understanding the underlying principles to the software, so you know what you're doing. And you can operate it manually if you ever needed to, if you chose to. And we have a lot of manual traders too. We talk about the automation, but we also have a tremendous number of manual traders. So we have Prop Trade Accelerator, then we've got Prop Trade Accelerator Plus, and then we've got our Master Key program. If you've made a decision that you really want to trade, whether it's this year, this month, this week, and you've said, you know what, I'm doubling down. I want to have access to everything. I want to be able to attend mentorships. I want to be able to get all the new software when it comes out. I want the highest and best software. I want unlimited use of everything. We have what's called the Master Key program. And the Master Key program is quite literally everything that's futures trading. We also include in that our Market Mavericks room, which is the one we mentioned earlier, which is the signal room. It's kind of nice sometimes to have a pro trader calling out trades while you're watching other markets and doing things. It does have all the mentorships that include drawing HVAs and the accelerated market profile. And we also have a number of different futures auto traders, and this gives you a key to the auto traders as well. We haven't talked about those. Those are that's a whole different side of our business. So if you've decided that trading is in your future and you really want that carte blanche master key access, we do offer that program as well. So Pat, I'm going to leave this. And by the way, there's one more thing with the master key. It's available for annual financing. So you can finance any payments you want over the course of a year. There's no significant down payment or anything like that. It's annualized financing. So Pat, I'm going to leave the rest of this to you. If anyone has any questions, now is the time to ask them. Pat is available, and he is, as I said, guys, take advantage of the fact that you have a grandmaster in front of you. This is what he does. Ask the questions. Pat, I'm going to stop the recording, but I'm going to leave this open. And unfortunately, I have to pull out now. So I will leave this open, though, for everyone. And I want to say thank you guys to those of you that joined us today. I hope you enjoyed it. I hope you got something out of it. This is something we take a lot of pride in, and stay posted because we've got some really cool stuff coming out. We're going to be doing another Funded Trader education driven webinar very soon. And just these topics, they vary. Some of them are on trade, some of them are on this. The next one is going to be very focused on trade entry and how to analyze the markets for determining which trades to take and when, and versus your timing. So if you've ever been to any of our in-person events, Pat teaches something called time timing in the market. So the next concept of trading, the next prop trader, funded trader series that we'll be doing will be time timing in the market. It's an absolute masterclass in how to trade throughout the day. So guys, the floor is open for questions. Pat, I have to go, but I'm going to stop the recording now and leave this open for everybody. All right.
Sure, thank you, David Trinkle. Hey, David, haven't seen you in a while. What webinar